The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Rich Anderson on at the half hour on Monday at 9:30. We're going to have Bill Meridian out of Vienna, Austria. If you recall, Bill was saying that he was expecting a rally following along with the Radley model into early July, which we've certainly seen. And so we'll watch. I did get an email from Norm Winsky. Norm has issued a flat-out sell, S-E-L-L, between today and Monday. He's selling it today, and he's offering a 100% guarantee of any of his free services. So if it doesn't work, you get 100% money back on any of his free services. So keep that in mind. We also heard from Shane Smolian. Shane believes that it's best to wait until early Monday. And I think that's probably the best advice we could probably get, because we have a situation on a Friday. In an up week, it's almost impossible for the market. Well, not impossible, but the odds are like 7 out of 10 that it's going to close higher. Even if it's just slightly higher, we'll have to wait and see. Okay, let's just review here this week how we started the week. Do it quickly so we don't spend a lot of time, because we've got some things that are happening that I think are relatively important. We were looking at the possibility that 1.618 expansion in Treasury bonds at 177.12 was going to be it in Treasury bonds. We're now trading below the we're right at the 172 level, almost ready to go into the 171. If we go below 171, this could be a game changer, because we've done it in a week. This is going to be on the weekly charts. You're going to see a really big bearish engulfing line, which candlestick boys watch very, very closely. So we want to watch that also. Also, as we came into the week, we felt that, hold on a second, we felt that the gold market was getting ready to have a pretty good correction, and so far it's down about $40 on the week. That gives us a target, as you can see from this ABCD structure, down around 1,300. I really think you have to take a look at it there from the long side if it gets there, and right now it's heading in that direction. So we'll wait and see. We also were looking at the British pound that we already posted into the room already this morning. It was our first chart that we were looking for a pretty good rally in that, and we certainly got that. And we should be in a situation now where we're getting ready for something to be pretty interesting happen very, very soon. We've got one other cross rate that is getting ready to have a move down, I believe. And I will put this one up and let you take a look at it. This happens to be the Australian dollar. And if you'll notice here, we have a beautiful Gartley pattern coming up at the 78.6 retracement level. It came within 2 pips last night of the exact price of that 786 level at 76.96. The low was 76. The high was 76.94. So that should be it in the British or the Australian dollar, as far as that is what we're looking at. Okay, let's get on to where the things. I've had several questions, and several people have sent me this graph from a gentleman out of Santa Barbara, California. He is a Manfred Zimmel. I will show you his Bradley model. It's very similar to the dates are very, very close, but the difference is that hold on, let me. Shucks, I did this wrong. Oh dear, give me a second here. Doggone it. There we go. This takes me a little bit longer. Hold on. We're going to put this up and take a look at it. The reason why this Bradley model is different than mine and then also than Norm's, because it is a weighted. In other words, they weight the planets more on one than they do the other. I don't do that. I just do it exactly the way that Bradley had it in his book. On these particular ones, they weight the inner planets with giving them more weight, and I've not done that. And it's just it's a guideline more than anything else. But you can see the same pattern is evolving here between July and October. You know, our model looks like we're going to bottom around Thanksgiving. This one bottoms in October. And if you notice that big red number there, 1019, you ought to pay attention to that, because that was a very, very important day on October the 19th of 1987. That was the scariest day in my 55 years of doing it, and I was on the right side of the market. So we'll see. We'll see what's going on with this. Okay, we'll take a look here at the stock market as I see it, and get ready to I'll pay attention. Well, not pay attention, but we'll see what's happening here with these things, and we'll go from here. First of all, we will start out with the. We're going to start out here with the. Hold on one second. We're going to start out here with the cash S&P. I posted this that there was a possibility that we could be looking at a move of an ABCD structure that could take us to 2240 in the S&P. So far, we've been to 2240, 240. It would be 2240 in the futures, but it's a 216 on this one. As you can see, we have that ABCD structure, and then we also have the expanding triangle. Now, this was featured on CNBC yesterday. I don't know who the gentleman was. I caught the very end of it. He didn't have any of the ratios, but he did have the lines drawing showing the diagonal triangle known as the T6 pattern. So he was watching that, and he was actually made an interesting case, for being bearish. But I don't know who the gentleman was. But we'll take a look next at the big one, which is the New York Stock Exchange Index. And if we take a look at this one, you'll notice that we are making that same 1, 2, 3, 4, 5 diagonal triangle. It's making a 1.618 expansion of the 1-2 swing, and it's making a 1.27 level of the 3-4 swing, and it's made a 78% retracement of the swing from May 19th, 2015. So we'll see. Folks, we've had Norm on the show now for well over a year, starting in May of last year. He's only given 3 outright signals, May 19th, 2015, and then in January, right around January 4th or 5th, he gave another sell signal, and then he gave another buy signal around the 10th of February. So pay attention to what he's looking at here, and also the work that Shane has done, because all of that is fitting into a possible bearish scenario. And if the bonds get below 170, folks, the canary is going to come out of the gold mine, because with that big bearish engulfing line, that's going to mean something, I think, coming in the beginning of the week. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted the Dow Jones E-mini showing the same megaphone pattern, also known as the T6 or reverse point wave. Diagonal triangle, whatever you'd like to call it. This was described by H.M. Gartley in his book, known as the T6. That's a triangle pattern, the six of the patterns that he was looking at there. It doesn't work all the time, but when it does work, it works very well. All I did with the Bradley stuff, or with the Gartley book, was to add the ratios to try to get a price level that tell us, you know, where we are. As you can see, we've hit this 1.618 in the Dow Jones futures. Now, that's a little tiny bit different in the Dow Jones Industrials themselves, and I think that's a function is that they were not open during the early part of the morning yesterday when things were going crazy. It was 50 points away in the Dow Jones. It missed it by about 50 points. Maybe it'll get it today. That number is 18,858, if that is the number that you're looking at. I think the fact that Tom O'Brien yesterday mentioned that we were looking at a price level in the New York Stock Exchange Index of 10,819, and we got to 10,810 was absolutely pretty amazing. So we'll watch that very, very closely also. Now, if we take a look at the NASDAQ, we're going to see that this market is lagging the market very badly. Remember, this was the most bullish of all the markets. This is the one that actually it topped way back in December of last year and has not made higher highs. As a matter of fact, all we did yesterday was to take out the high from April by 4 points and didn't really go anywhere. I don't know if that means anything or not, but we'll wait and see. But we do have these expanding triangles in the major averages, the S&P and the Dow Jones and the New York Stock Exchange Index present. So we probably should pay attention to it. And they're all related to that 1.618 number, which is the best number, because once you get beyond that, you're going to be going a lot higher, which we certainly could go a lot higher without any problems. But if we start down, we'll see what happens, and we'll go from that level. Okay, now I wanted to mention one other thing, that we had a question from someone in the Den asked about the gasoline futures, because we came into the week friendly to heating oil, gasoline, and also to crude oil. And we'll see here that we've had a pretty good rally of about 10 cents a gallon in futures. That's quite a bit. We haven't even made a 382 retracement of the previous swing yet. So there's a possibility we'd get all the way up to $1.49 a gallon in these futures. But they've been up every day this week. And so they've held up pretty well, as has heating oil and also the crude oil. So all those patterns are moving along to see what's going on with the crude oil complex. We'll be talking to Rich Anderson here in about 10 minutes on the grains and also on some other things along with the cattle market. But right now we want to cover some of these other things that we're looking at on these particular markets that we're watching. There's a lot of news. I'll be spending a lot of time this weekend working on the newsletter, going across the globe to see what's happening with all of the things that are going on in the world. And I wanted to start out with, I'll just give you a little idea of what I'm looking at. And this is the Nikkei on a weekly basis. As you can see, we did make new lows for the year before we reversed right at that Brexit. That's when Mr. Abbey, the finance minister, came in and said, we're going to do everything that we can to make this stock market go up. Well, they should, because they're buying all the stocks. So that's what's going to be interesting there. Oh, we got a caller, our friend Brent from California. Brent, are you there?
Larry, how are you?
I'm above ground, staying away from open graves, my friend. What can I do for you?
You're going to have to forgive me. I came into the show a little late, and I just caught the last little part of you talking about Norm, his call, I guess, that he's making. I hate to make you repeat yourself, but if you could kind of go over that again, please.
He said this was a flat-out sell signal, that within between Friday and Monday the market should start down, and he would offer 100% guarantee rebate on any of the free services that he has. So what a warm-hearted guy that guy is. So for him to say that, he must really feel confident about it. He's only given us 3 flat-out signals in the year that we've been with him, because I write them down. And because I told him the first time he's wrong, I mean, he will never have him on again. No, that's not
he gets
true.
The big boot at that point, huh?
Just like the restaurant business. Yeah, but that's what he's saying. He said we should start down either today or Monday, is what he's saying.
Okay. Could you go over gold if you haven't done that already?
Sure. I'll put up the gold chart. That's a very interesting one, because this was a pattern that if you like that reverse point wave that we've been talking about, also known as that diagonal triangle, you'll see here that last week we just completed that 1, 2, 3, 4, 5 expanding triangle known as the reverse point wave. It was exactly 382 of the 2011 high, and it was a 1.618 from the high that we made in early May. So we had 4 different sets of numbers there saying that we were at pretty good resistance, and we've already backed off more than $40 an ounce, and I think we're going to come down to that 1,300 level, which would equal the last correction that we had, which would have been about $70, which happens to be about 2 times the harmonic number of 35. So that's what it looks like in the gold. But I'm waiting for 1,300. It won't probably be hit today, and will most probably be hit. I shouldn't say that, because as soon as I do that, it'll be hit within the next 10 minutes. But I'm looking for it to happen early in the Monday, because we have a full moon coming up in a few days. And so that'll be an interesting phenomenon to observe, because I believe the full moon comes in on the 19th of July. Ooh, thanks
Okay.
for reminding me. Yep, got a sister having a birthday on the 19th of July, so I got to remember to do something here. Anything
Well,
anything else, my friend?
I think that's it. You just have a great weekend, and just give the best to your family, and I'll plan on talking to you soon, okay?
Thanks again, and tell Leanne I said hello.
Okay,
thanks a lot, Brant.
with your wife. All right,
Okay,
all right, take care, Larry.
Yeah,
All right,
bye-bye.
all right.
Okay. Okay, folks. Anyway, that's what we're looking at in gold, is wait for that 1300 level, and then we'll see if it's going to hold up from that level. Then we'll go from there. I wouldn't be afraid to buy gold if it got to 1300 with a $10 stop. That's a beautiful pattern. It's right at a 0.618 retracement. It has everything going for it that you could possibly ask for, as far as numbers and ratios and patterns. It's set up. Remember, these patterns don't work all the time, folks, as you're well aware. But you do want to pay attention that sometimes they do work, and when they do, they work relatively well. So remember, you must use some stop protection, to protect yourself against yourself, and that's the key to really understanding this. So we'll have Rich Anderson on in a few minutes. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson from Anderson Capital Management on. Rich, are you there?
Good morning, Larry. You bet.
Rich, first question we have is about the status of the order flow and brokerage stuff. Have the brokerage firms reduced margins at all since the Brexit, or are they still at the same levels that they were before?
I haven't noticed any announcements where they're lowering anything. There's still so much volatility in these things. I mean, look at a non-Brexit market. Look at the bean range yesterday as an example.
Sure.
They're in no hurry. There's just all these uncertainties that can come and surprise you, and that's what I think they're concerned about. And as even though we preach about risk management and using stops, in the real world, it's awfully hard to do that. You've got to have your line in the sand where you just step out, and especially when you're just learning to trade, it's rather difficult, and it can be frustrating at times. I mean, but if you don't do that, then sooner or later, it might be a year or two, but sooner or later there'll be one that'll just really knock you out. So
yeah,
that's one thing you got to learn. I know you preach it all the time and teach it all the time.
Well, the chart that we're looking at this morning here is the Christmas corn, December corn, because we're right down near a 61% retracement of this past move at the 362 a bushel. We closed at 365 a bushel, and then we'll open. Oh, we're opening now, aren't we?
Yep. We opened at 8:30. We're down 4. I don't know if you saw, but last night at 6 o'clock, the National Weather Service gets the satellite readings, multiple times a day. And one of the times it's the 6 o'clock one, and then they run it through their models, and it showed a little wetter than normal. And notice how, of course, it's 6 o'clock in the morning, so the Asians are trading, Europeans are trading, but we're just rolling out of bed for the most part in the U.S. They got the corn all the way down to 350.
These corn?
Yeah, they ran the stops and got her down to 350. Isn't that amazing? Most people are still, getting ready to turn on the computer, and they take a little run at it. And that was all about GFS readings on the weather. Now that's going to continue. About every 6 hours, one of these things is going to come out, and these models flip flop, and the EU model comes out every 12 hours. The GFS model comes out every 6 hours. So that's what you're dealing with. And so for anybody that isn't a meteorologist and has access to this, and even if you do, you got to use close stops. The next one will be they'll start getting their data, their satellite data at 11:30, 11:45, and so just before noon, if all of a sudden the data, there's just a little bit of a difference, and all of a sudden it's drier or hotter, zoom,
Rich,
that's
remember
what we're
when we
dealing
first
with.
started
6 hours and 12 hours. Every 6 hours and 12 hours, there's new information about the weather, and then we've got a long weekend. So.
Wow. Rich, when we first started trading together 40 years ago, when you were just a little whippersnapper,
I was probably 14 then.
Yeah, I know. I think you were 13, maybe.
Yeah.
Anyway, we had a situation where we never had satellites. I mean, we had to have the boys go out into the, the fields.
Right, and they still do that.
They still do that. I'm sure they do. They roam through Illinois, Indiana, and Iowa and stuff looking. But they say that these satellites will tell you what a crop is doing, and they can read a pack of cigarettes, the warning thing on a pack of cigarettes from 5 miles up. So they certainly ought to be able to see what a soybean plant looks like. But these weather markets can really be treacherous. That's for sure.
Right. The heat signature of the crops. Can tell the guys that have the fancy computers maybe within a half a bushel to a bushel what something's going to yield. But yeah, they still have they'll have the crop tour in August, and they'll actually go stop at the same spots every year. They'll go out and they'll collect X amount of ears of corn. They'll count the length of the kernels, how many kernels long it is, how many kernels around it is, and they'll take these samples at specific destinations. So it's like a 3.5 day tour. They try and get as specific as they can. But that corn, by the way, since we went from 350 up to 360, whatever it was, 66 3/4. And I don't know that the boys will want to be that short over the weekend because they could flip these models and turn hotter and drier. It would seem to me that, it'll pull back into the, probably pull back into the 57 area, 58 area. What I would measure your retracements, and then if the market gets down there, in the next hour or so, I'd have an interest.
We've had a 40-cent swing in soybeans already today.
Yeah, and that's all from that report. That's all from the weather data. And then everybody's got a computer model. And, let's put it in terms of technical analysis. You might use a 10-day moving average, and I might use a 20-day moving average. The next guy uses a 50. We're all using the same thing, the same model, but we're tweaking it slightly. And it's the same data going into all these different computers. But this guy's tweaked his slightly, and there's about a half a dozen different weather models besides the EU model and the GFS, and of course then you go with the trend. Which one has been predicting more accurately, and then you go with that model until it stops predicting more accurately.
That's for sure.
It's a crazy time of the year in the grain markets.
Well, the next question that you talked to us about the 108 level in cattle last time you were on, which was a little over a week ago, and we got down to that 108 right on the money, and we rallied almost 5 cents a pound here. We've posted the chart of the October cattle. Now we're up near 113. What do you see happening here? Because we've had some pretty strong moves here the last few days in cattle.
Well, the strange thing about the cattle market is that we're trading $8 under. 118 to 120 is probably going to be cash this week. So at right now, ox are 112.20. If they traded 120, that'd be $8 under. Normally at this time of the year, October cattle are $2.50 over. I think they banged around the big cattle traders, and so they're not taking the big positions like they have normally been taking them. And what's happening is that there's going to come a point when they're going to look, hey, the economy's not that bad, oil prices aren't that bad, beef's going to start to move. It's just August. Late July and August are typically fluky times for the cattle market where it just flops around. What you notice, though, is that the August gained and is now 80 points over the October. Yesterday was the last day of the Golden Roll. And so August should, eventually converge to cash, but it won't converge to cash for a bit of time because they'll be looking at it as the end of August. And between, when cash cattle can move $5, it takes two.
Okay. We've got to take a break here. Stay with us, Rich, and we'll be right back. Okay, buddy?
All right, you bet.
Okay.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks. We're talking with Rich Anderson of Anderson Capital Management. Rich, we've had a question about who are the dominant players in the cattle market. I remember years ago when we knew Ladd Hitch out of Guayman, Oklahoma. He supplied all the beef of the western United States for McDonald's. He was a big player, but we have so many commercial companies now. Who are the big players in the cattle market?
Oh, you got a group of guys in Iowa. There's a group of guys down in Texas, a group of guys out in Tennessee. You know their names. But on the flip side, one of the commercials that's kind of getting out of the feedlot business is Cargill. A week or so ago, they announced that they're going to sell a couple of their feedlots down in Texas that originally they had been using to make sure that their 2 packing plants down there that had consistent flow of cattle to them. But they're going to reallocate their money to more profitable endeavors. The cattle feeding business is a tough business. You almost all the time you're putting these cattle in at a loss, hoping that things will improve and you'll be able to make a profit when you sell them, which is a tough way to do business. You're better off trading the board because at least you got a 50-50 chance when you put it in.
That's for sure. And the hog business is even worse, isn't it?
Yeah, although believe it or not, Larry, most of the hogs, they're kind of like factories, these big confinement units. And,
sure.
And they don't allow anybody in unless you take that doesn't, even the people that they do allow in, the normal people, they have to take a shower, and it's like going into surgery. I mean, it's because disease is such a big deal. So almost, I'd say, 90+% get these long-term contracts, and so they're kind of fixed in. That's what makes the hog market so volatile, is there's really only a free supply that is maybe 3 to 5%. And, so 3 to 5%, that's not much of a change, and that can change price dramatically over a period of time. That's the difference.
Okay, we got a question from one of our listeners about what you're feeling on the gold and silver, the fact that we had this gold-silver ratio hit a 2-year high just the other day. And do you feel that silver is the one to buy on a pullback, or is gold? What would you be advising?
Well, gold is the de facto currency, and the more money you have at negative interest rate, the more that becomes a currency, and the more it takes away the argument that it's silly to own gold because it costs you interest, and you can gain interest in the bond market. We had 10-year German bonds sell into negative interest rate, and the Japanese are thinking of selling a 50-year yen bond that would be at a negative interest rate. Well, that's That's funny money because that's being sold by the Japanese government, bought by the Japanese government, and at negative interest rate, of course, it's never going to, So I got to believe that you buy gold on retracements, and you put out the numbers, and anybody can calculate them. Silver will tag along, but silver's still more of an industrial metal and doesn't have that currency kind of de facto effect that gold does. But that doesn't mean that from time to time they'll have their pullbacks, and that's when the opportunity, screams, get in.
Can you imagine a 50-year negative interest rate bonds? Who would? Well, they're going, like you mentioned.
Well,
they're
it's the government.
They're going to buy them themselves. Yes.
Who owns the majority of the stock ETFs in the Nikkei are owned by the Japanese government. They don't just buy bonds over there; they buy everything. They're buying the stock, ETFs.
Well, that's going to be interesting to see how their stock timing works out. They've offered to hire me as a market timer, but they put me on a different list than somebody. No comments, Rich. Okay.
Yeah.
Okay. Anyway, let's take a look here. We were just talking about the bonds. We've come down 5 handles now this week, and we're going to leave it really. If they close anywhere down here, we're going to have one of the biggest bearish engulfing lines we've had in a long time on the daily and weekly charts in bonds, and I think that's maybe could be the start of the fact that maybe this top in bonds might be in.
The market action looks like that, but I would suggest that at 166, and I didn't do any calculations, just jumping off the screen at me, there'll be buyers coming in because with German negative interest rates, with $11 trillion in negative interest rates, if you want something that's safe, a currency that's safe, you're going to kind of come here. But 166 is still an awfully nice trade. And
166, I will give you a big hug if I see 166 in September or December bonds. That's one heck of a move because they've already moved 5 handles this week. I mean, that's only another week of this, and we'd be there.
That's why these companies aren't lowering their margins. I mean, we're in a whole new ball game, and every 6 hours you got a new weather forecast. So if I'm trading grains at 11:30 or so, I start watching my technicals on a shorter term basis, and then the market starts to move. I figure that's new weather forecasts coming out, and I go with the momentum.
Sure. We're even seeing notes now are breaking down below the lows of the several days ago. We're trading below 132 now in the notes. Those also, and they couldn't even make new highs. In early July, which is a big divergence. So I don't know. Negative interest rates have never made any sense to me, but whether this is the talking heads are going to make anything from it, we'll have to wait and see. We're going to be coming up to a break right now, and I just wanted to thank you for coming on. I know you have to get back to your customers and also yourself, so I wanted to thank you again for being on the air. We'll have you on in a week or so, okay, Rich?
All right, but every 6 hours, just before 12, it's crazy, but that's what the weather markets are like, and that's for the next 4 to 6 weeks. Trade well.
That's Central Time, correct?
That's Central Time. Yeah, Central Time because
12 o'clock.
That's when the satellite data comes down, and all these companies start running their models, and they'll either be higher, hotter, or wetter. And where do they place the ridge? Do they place it out in the west so it doesn't mean anything, or do they move it into the Corn Belt, which that means a bunch? And the acreage is tight enough in the beans that these beans can, it can be like riding a roller coaster.
Well, that's true. Now, Rich, do they read it like off like a Reuters machine, like we used to when we used to get the money supply and cattle on feed numbers and stuff?
Well, these are paid services. They're buying the data from the National Weather Service. They run it through their computers, and then they're sending out instant messages. In the old days, they sent out faxes. Now it's instant messages or emails, but mostly instant messages, so the guys have it right away of what the new stuff is.
Wow, and they can literally get that on their telephones now too, probably, right?
Oh yeah. When I get fills, let's say I'm out of the office and I get fills, my instant message, they show up on my phone as fast as they do on my computer as if I was sitting at my desk.
Holy
and,
cow.
And instant messages, so that's how fast the news flow is. It's much faster than it used to be. Used to be you'd send a fax, and so whenever they go and grab the fax and read it, but now it pops up right in front of you.
Wow. I remember we used to have to send our orders in on ticker tape and then also or on by teletype and then also by telephone. We did that up until that was about 95 when we finally started getting the internet working and everything. So things changed in a long time, right, partner?
Oh, I've got a buddy in Oklahoma that his dad used to mail his orders in for the wheat market on a postcard. That's how he traded wheat. Mailed it in.
Wow. Holy cow, that's fabulous. Hey, listen, thanks for being on the show,
bet.
pal, and I'll talk to you soon.
Thanks.
Rich Anderson of Anderson Capital Management, always giving us some good information. And of course, so we're going to have to take another break here. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of the euro. As you can see, we have a tremendous amount of support at 109. Going below 109 really sets up a very negative scenario, because after the Brexit, you see we had a rally for 8 days. Then we've had this sell-off for 5 days. And any move below 109 would really set up a very negative chart pattern that would point towards par, which is our long-term chart objective on the euro. Now, I would like to suggest you folks to do a little bit of homework, and that is to pull out the New York Stock Exchange Index chart and do your own work on the expanding triangle, the 5-point reverse wave, and see how the ratios line up. I think you'll be surprised that they come pretty close to spot on what we're looking at here. They might not work, but the odds favor chance favors the prepared mind, as they say. So play close attention to those patterns, folks. They don't work all the time, but they work a heck of a lot more than they fail, and that's the big thing. Also, we want to watch the gold. If we get it down another $25 from where we are right now, anywhere near that $1,300 level, I would think that that would be a place that I'd want to be buying gold. As Rich Anderson mentioned, it's become a currency again, which it really has been for many people across Europe all these years. So I think that's just the beginning in this gold and silver market of something, really, really big to come. But right now we're having one of these little corrections. Remember, our first big correction in gold was almost $70 when we got down to that 1202 level. Then we ran up and made new highs at $150 higher, $170 higher, and now we're pulling back into that area. That would also be a 382 of that low of 202, so 1202. So watch that gold at 1300. I think it will be an interesting play if it gets there. We jump around $4 or $5 every 5 minutes nowadays, so it's really quite amazing. Now, so far, I posted a chart in of the DAX, the German market. Even with all the stuff that's going on, it did not take out the 78% retracement, and that's what we've hit so far in the S&P. Live every day in an attitude of gratitude. Have a wonderful weekend, and please say some prayers for the folks from Nice, because that's bad stuff, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.